Good morning, everyone. How's everyone doing? You guys have a good weekend? Hey, David, how are you? It's been a while. Kevin, Raj, what's going on? Ah, good, good, good. Hey, Lonigan, what's going on? Ah, it's been a, it's going to be an interesting 4 years, and it's a little slow now. So let's run down the overnight, see what's going on, and then I'm going to talk a little bit about how we're going to deal with this. Hi, a second. Hi, Laura. Yes, I do share live trade guidance. I like to share live trade guidance during Globex, but if it's really slow, I, I'll talk about what to expect, how to, prepare, things like that. But yeah, if the market's a little quicker, we can definitely run some trades. Um, so not only do I like to share live trades, but tell you why we're taking the trades. Um, and what the reason for the trade is, and if the trade starts going wrong, what the reason is to get out, so we minimize our capital expenditure, all that sort of thing. So it's a very practical thing. And then when you join the room, you have access to me. You can just DM me anytime if you have issues or things you want to talk about. Hey Dan, good morning. Give it a shot for a month and see if you like it. There's no obligations. Let's let me pop back into what we're looking at here. Friday, I left. This is the Thursday profile, the Thursday overnight, the Thursday Globex profile, because I wanted you guys to see something. If you look at Thursday, look at that 59.75 area. You could see that all the inventory is underneath it, right? And that means all the product. Oh yeah, it'll be great to have you, Laura. Give me a DM when you join the room. Now what this means is we're taking this stuff here and we sold it Friday for higher, right? For profit. Now, during the overnight session, the nice thing about these overnight sessions is they allow people who got trapped short to come in and try and do some buying, do some short covering. You can see evidence of that in our overnight low, which is a poor low. The overnight low has not taken out Friday's low because the people who are short here averaged up here and they're trying to do a little buying here. That's why you have this shape profile that looks like the letter B, because you have liquidation from the top sort of falling into this area. And what that's doing is it's allowing people who got caught short to cover. Now, the problem for us doesn't make it a very frisky trading environment for us. You see? So once we go and we understand what's going on, that inventory is short, we have a poor low, we're looking for a move higher later on. See, if that poor low holds, you'll get rotation back up. Because what happens is the early bird gets the worm. The people who are buying in the overnight, they'll get all the cheap supply, right? And if they get the cheap supply, the market will rotate up looking for sellers at higher prices, right? So if you're shorting against a poor low, you either have to have a larger account or you have to be able to hold that short for a while. And we'll show you how that works once we go to the next screenshot. So that's basically what's going on now. We have a very light volume, 41,000 contracts. As the market gets higher and higher, it gets a bit more unpredictable. And unfortunately, what happened on Thursday, you had that big argument with the president and Musk. It got a lot of people caught short here under 59.40, and they added to it here. There's a large short position from 2 days under 59.80, and that's what's currently holding the market up. Now, we'll get to some trades here real quick. I want to talk to you guys, especially folks in the room. Over the next 4 years, I don't know if this market's going to calm down. I don't know if it's going to get back to normal, right? We've been waiting for the market to get back to normal now for 5 years, and it hasn't. The problem is the macroeconomic stuff keeps changing, and it's difficult to trade macro. I'm not saying macro is a bad thing, but I'm saying for day traders and swing traders, take the macro and just put it to the side just for a little bit and trust the chart. The chart is telling you what the business is doing at that time. The chart is not trying to predict what's going to happen in the future. It'll show you what happened in the past, and it'll show you what is currently happening. So currently, this thing is priced just under 6,000. You have to trust the chart. If you have a poor low, and over the course of Globex, if we start rotating higher, the chart is trying to tell you that nobody needs to sell underneath that 59.92 low. If the chart is trying to tell you that nobody needs to sell under 59.92, there's no reason to be short. There's no business reason for the trade, right? Now, if you're a larger trader and you're building a short position and you can trade around it and all that stuff, that's great. I'm addressing retail traders, right? Retail traders, you can't afford to be wrong and be early, and you can't afford to make mistakes because you just don't have the margin of error that an institutional or a large trader has. For them, $10,000, that's nothing. If you guys are offside $10,000 on a trade, that's your account. Does that make sense? So just write this down, and this is going to be Bible for the next 4 years. And it should always be. Trust the chart. Because no matter what's going on in the news, no matter what the policies that are being set, the chart is trying to tell you the current state of business. And if you go against the current state of business, you're being delusional. Does that make sense? So if you're like short biased, that's great. I'm short biased too. This move is not a move that I trust. But I'm not going to short against it because I see that there's a poor low, right? And overnight inventory is short, which means we should be doing this. Now, if that poor low breaks, that's another story. That's a change of information. But until the chart tells me that information has changed, why would I go against what I'm seeing? Just because I think or I feel or it should. The market doesn't care about us, right? We are flies on the back of an elephant, right? Write that down, trust the chart until the macro catches up, okay? The chart will tell you the current state of business. So right now, we have a poor low, and we are one time framing higher off that poor low. That's not a short scenario just yet. Does that make sense? Right? We're already correcting inventory upwards. Well, Lonigan, here's the thing. That's a good question, right? How to trust the chart and not the voices in your head. Lonigan, do the voices in your head, are they sitting on the trade desk at Fidelity? Are they sitting on the trade desk at Citadel? The voices in your head are meaningless, right? The voices in your head, right? They don't know what the heck they're talking about. You have to be able to, like, if you went to a doctor and the doctor showed you an x-ray and told you this is what's going on, and you have absolutely no medical training, like you don't know the knee bone from the shin bone to the solar plexus, you don't know anything, like you don't know anything about human anatomy, and the doctor showed you something, would you sit there and argue with the doctor? The chart is the expert. You are not an expert. I am not an expert. I have 33 years in this business. Petra. Hey, how you doing? There's my troublemaker from San Francisco. How are you? Okay. So, don't listen to the voices in your head when it comes to trading. Okay? All right? Because they have no idea what's going on. The chart is actually telling you that people are buying 98 and 3/4. Right? You got to trust the chart. Because the news is going to be weird, right? See, the problem is to silence those voices, right? What you want to do is you just want to focus. See, that's where we get into trouble in trading. We think that we have to watch all these things, and then you get these voices in your head from looking at Twitter. People are talking about Trump and Musk, and they're going back and forth on all this stuff, right? Do that exercise I taught you. Just sit and pay attention to the chart. You know what I mean? Just pay attention to the chart. And if you pay attention to the chart, right, focus, my friends, right? You know that there's my balance zone this morning, 94.5 to 98.5. VWAP's just under 6,000, right? We have sellers here, right? So the market went up, hit those sellers, the sellers initiated. Now we're back down. Let's see if we can get over 6,001. But the chart is clearly telling you that the market is raising price. Look at these lows. Don't short that, right? Don't short that. That's the front side of the move now, right? You got to wait for the back side of the move to short. And if you think about it logically and rationally, and if you focus and teach yourself how to think in this manner, when you're actually in a trade and you're under fire, your instincts that have been trained will come in and they won't fail you. You know, it's like those people who are soldiers. They're taught they're trained to react, right? So when they go into battle, they just don't lose it. It's the same thing in trading. Train yourself to be disciplined. Train yourself to watch and observe, right? And when you watch and observe and you see a pattern like that, that is a do not short, right? Really trust the chart because you know what? Here's the thing. You cannot trust politicians and you can't trust the CEOs of public companies not to act like fools, right? Those two idiots shaved $152 billion off the market capitalization of an S&P 500 company on Friday or on Thursday. This is the most irresponsible behavior I have ever seen in a capital market. They should both be fired for that kind of behavior. Obviously, there's no checks and balances because he's dismantled the SEC. So you have to be vigilant. Don't trust what's coming off of Twitter, off of the news. Trust this. Trust your chart because your chart is telling you what's going on in the business, right? So if you were short 98, now it's trading 6,002, right? It's not good. Go with, right? So now we are correcting inventory upwards. Next place I'll be looking for sellers is just up here. And what I'm doing when I put this sellers thing on is I look to see where the sellers initiated on the way down. Because they'll be there again when we get back up there. They always are. Why? Because if I was selling at 3/4, I'd be there again when it gets up there. So they're going to take this is the inventory of the overnight, and they're going to try and sell it somewhere here, right? That's the current mode of business. That's what the chart's telling us. The chart's telling us this is the accumulated volume. Now we're going to go and try and distribute that volume for profit. Okay? Hey, William, nice work. Congratulations on the payout. That's great. Well done. See they're front running? Right? We knew that there'd be sellers here. Now, how is that practical? How is that useful? Well, let's say you were long, right? If you were long off of this area or even here, as the market came up here, you take a little profit. Now, say you want to short. If you think this is going to be the back end of the move, say you short here. Well, your stop's going to be where those sellers are. And that's how you can use structure to trade. So if you're shorting this, your risk should be no more than this. And because VWAP is here, you'll be looking for bids at 6,000. Now you have to determine whether or not those 2 points is worth the risk. Right? And that's what you want to do when you're trading. You keep hearing my voice in your head? Oh, that's scary. Right? So if you want to, think about this like this is where they load the truck. This is the highway to the store, and they're going to take the goods, and somewhere here they're going to distribute. And this is that inventory correction that we were talking about. Overnight inventory is short. Normal business is to correct upwards. What was our clue to not short it? That was clue number 1. Clue number 2 was the lows were getting higher. Right? That's clue number 2. Nice work, Lonigan. Nice work. Beautiful. Nice, simple, practical information that can make us some money. We don't have to spend millions on software. Just keep it simple. You buy a little bit, you sell a little bit, take your money, go have a coffee. Life is short. Life is simple, You don't have to look at 20 or 30 things. I see people on Twitter and bless them. My God, they have these like 4-page trade plans. I'm like, how do you remember all of that when you're trading? Right? I don't know how you remember like a 4-page trade plan when you're actually in a trade. Because I tried doing that. Because when I started, Dalton had these sheets, and they were like 3 or 4 pages, and I went through them every night, which was good to learn. Nothing wrong with that for learning. But they didn't help me at all with execution. Right? Execution's really difficult. So you should have a method of execution or a methodology that is built on the business. And if the business is telling you that nobody needs to sell under 6,000, there's no reason to short it. You go long, right? And you put your stop underneath, right? The business reason for the trade is that nobody needs to sell under 59.98 and a half. So if you're going long around 59.99 or 6,000, your stop is at 98 half. Because if somebody starts selling at 98, 97, well, then your business reason for holding 99 product doesn't make any sense, right? because somebody's undercutting the price. Make sense? You guys follow? Every trade has a business reason, right? If there's no business reason, don't take the trade. When the business reason goes away, get the hell out of the trade, right? Keep it really simple, right? Now, because it's kind of a slow night, this is what I'm curious. Now, what the thing is, do we go sideways here under 6,006? Or, right, behind door number 2, as Monty Hall would say, right? Do we go sideways here and distribute? But if enough people have shorted down here, and they all start to buy back at the same time, then we'll get above 6,006. This is what I'm waiting for, Jerry. I think we're going to go sideways here. So we're going to have to wait for them to get rid of some of this up here before we short it. Right? Because remember that short I told you about here, that didn't work. Right? So just to keep shorting it, just because it's gone up, now you got to give it time. See how much time it took to get the product? It's going to take some time to get rid of the product. Here, distribution takes time. So for example, if you are short 4 or 5, right? Say if you're short, that's fine. Put your stop above those candles and put some bids down here underneath 2. Right? Nothing wrong with taking a short, but let's be smart about it, right? Say you're short 4 or 5, right? Put your stop at the top of those candles where there's that little double top, right? And your bids should be just here. So say you're short 4.5, 5. Put in a 2.25 bid. Because if you can't get filled at 2.25, right? See how it's rotating back up? See how it went right to 2.5? It stopped right here and then started to move back up again? As soon as a market moves up, everybody wants to short it. I don't know why that is. I think it's because they missed the move up. So they're like, okay, what's the next trade is a short down. But where's the inventory, Jerry? So had you shorted it at 4.5, 5, and you had 2 bids in, 2 bids in, if those 2.25 bids didn't get filled, you got to take the offer. Buy ask. Otherwise, now you're back up to your break-even point, and there's no point in the trade. Right? So had you shorted this and you saw that you could not get filled here, you got to cover the trade. Right? There are mechanics that are going on here that are causing this movement back and forth. If you understand the mechanics of this movement, it will keep you from just shorting blindly. This is a backfill. The market ran out of buyers at 5.25. So they put the price on sale to 6 to 2.5. That brought in buyers. Right? No, the Friday close is 10. It's not 6.75. Now London's opening, let's take a look. Now when the market moves back down to under 4, where they took the stops here, there should be some bids. If you guys can spend some time watching, watch. Look to see if there's bids there. Just look. See how it came one tick underneath and then bounced? That means there's buyers there. Why? Because there's trapped shorts under 3.5. Look, I told you it would come down here, went one tick under, and bounced. How did I know that? Because I've been watching this market since 2012 for 18 hours a day. That's why you trade one market and get to know it like the back of your hand. So you're not shorting it indiscriminately, right? You understand why there's going to be buying at a certain level. If you understand why there's going to be buying, if there is no buying, then the market's trying to tell you something. But that is just normal business happening. Because anybody who was short all night would have had their stop under that W high or above that W high. So when we took it and came back down, there was responsive buying at 3.5. Do you guys understand that? People who were short early on in the evening would have been using that as their stop. That's why there's responsive buying there when we take it and come back. Now, the longer we hang out at 3.5, those people may drop their bids down to 2, 2.5, 1, 1.5, right? If they see a seller. So you just sit and watch. Watch now. Watch the offer and watch how it comes down. Spend some time watching a market before you just go jumping in. And don't watch thinking about moving averages and all that stuff. Watch and think about the mechanics of what's going on. None of this is random. None of what you're seeing is random. Right? When it comes to money, there is nothing random about money. Okay? See how they're front running? Now, if you look on the 1 minute candle, you make those candles bigger. That level's 3.5, right? Right here. Look how they're front running that level. That means the shorts are bidding the market up, which means the wholesalers who are selling are able to raise price. Right? Buyers are not in control. The sellers are in control because they get to raise prices. If I'm buying something and the price is going up, I'm not in control. That's the dumbest statement I've ever heard in trading. Exactly, Donegan. One reason why people short immediately when we go higher is they don't realize it takes time to distribute. Right? The buyers aren't in control. Who wants to pay more? Oh, it's $5. I'd like to pay 10, please. What? The only time the buyers are in control is when there's a fire sale. See, look. Now I'm watching to see whether my levels are working. I haven't taken a trade yet. Truth be told, I don't know. There's something wrong with me. I must have picked up something on my when I came back because I just have not been feeling well at all this weekend. So I better do some test trades. Now, as we take the next stop, look, see how they're selling into it right there? right at that V high, okay, that's normal, right? Because any large trader is going to sell where the buying is. So if I know that they're going to be buying because the shorts, if I know the shorts are going to be buying and they're getting stopped out here, that's where I'm going to put my sell orders so I can sell my position, right? That's why it kind of went up and then dipped. Now let's see if we get above 7. See, look at that. That is deliberate movement higher after the position is acquired. So I'll kind of be looking for this level right here to see if it holds support right around 4, right? I'm just getting to know the market this morning, right? I'm just getting to know it. It's a little look above and fail of 6.5. Now this is a backfill, which means it's a little bit of a sale. This sale is going to bring in some buyers. Let's see where the buyers step in, right? Right? And once again, where we took the K high, there should be a little bit of buying here, right? It's all structure. It's all structure. So if we break this level, look for it to retrace back down to 6,003.5, which will be under here. Now it's going to get, do you see how the candles are getting tighter? This is that little distribution. Now we're going to go back and forth to see if that brings buyers. If it doesn't, we'll put it on sale until we do bring buyers in, just like we did here. You see? See how it's slow? The candles are getting smaller. That's distribution, right? Right? There's a seller at 5.5. So now at least I know my levels are working, right? So now all we need to do is just wait for our trade setup, right? Wait for a proper trade. To look above and fail, to look below and fail. So you remember what I said? If it can't hold that level, it's going to drop down. Now, what did I miss? Right? I missed the short here. Got a little bit of Monday morning brain going, right? Weekend brain. Should have been shorting this area with my stop here and then covering down here, right? Exactly. Look above and fail, right? So not clued in as I should be, which means I need to get my discipline up. When you miss trades, don't get upset. Go, okay, what did I miss? Why did I miss that? Was I focusing too much on a long? But was I not focusing on seeing that there was a constant seller at 5.5? I even said there's a seller at 5.5. When I said there's a seller at 5.5, we should have been shorting with that seller. See? So brain needs to wake up a little bit more, right? Need to have some coffee and wake up. Right? There you go, Dave. Nice work. So right there, I know I need to work on my discipline, right? When you start missing trades or you miss obvious trades, you should write down in your trading journal, hey, need to work on discipline, right? Right. So this is a little sale from 6 down to 2 to see if we can bring in any buyers. We caught some buyers at 2 and 3. Let's see if we can get them to pay 4.5, 5. Oh, seller at 4.5. POC still hasn't moved up. A look above and fail is exactly a form of putting price on discount, right? So you take a market up, you get buyers, 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 then you run out of buyers, right? Soon as you start running out of buyers, GZ, the sellers will start to compete for the buyers underneath that level. So you take a market from like $5 to $8. Soon as it hits 8 and you start running out of buyers, everyone will start selling 7.75, 7.5, 7, and putting it on sale to capture the buyers that are waiting to pay lower prices. Because when you're a size seller, see they're long underneath 98.5. So whether they sell it at 6,004, 6,002, 6,006 doesn't make a difference. What they need to do is they need to get rid of their inventory. Because they're not holding 5 or 6 contracts. They're holding 500, 600, 1,000, right? So this is the distribution of this. This is where you load up the trucks. This is the highway to the store. And this is where you're selling it in the store. Now, the problem is if you can't sell it at this store, you got to go and take it to TK Maxx and put it on sale, right? All this is a sales chart. It's telling us how sales are going minute by minute of a product. This product are ES futures. That's all it is. That's all a chart is. A chart is a sales chart. Nothing more than that. I've got one of my guys is he's an institutional guy at Bonnie Bank of New York, and he was just like, he listens to stuff in the rooms and stuff. And he goes, I don't know why retail people make it so complicated, right? You don't need to make it complicated. It's really, really simple business. It's not easy. It's not an easy business by any means because you have to develop a way of executing and making money that manages risk that goes with the business. And if you don't understand what's going on, that's why it's like trying to hit a moving target with a blindfold on because you have no clue what the hell's going on. So let's figure out what's going on, and then that way you'll be able to build an execution plan that works with what's going on. And you can manage your risk, right? So if I was trading right now, I'm not, there's nothing for me to do here, right? I missed the short here, and I missed this long here. So right in the middle, there is nothing for me to do. Right? And that's the other thing. See, look, there's a constant seller right here. Check this out. You can see that there's a seller right there. They initiate at the same price. There, 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 there. So we've got to get above that. See how it's lifting above? Let's see if we can print. Ooh, a print. Nice. Right? Seller comes back. Do you guys notice oftentimes when you get into a bad trade? Have a good one, Tim. Like say you're long at 4.5. The market gets to 4.5 and then sells off. Just where? Have you guys ever noticed that, or is that just me? Right? You've initiated long right where the sellers are competing. That's why that happens. It's fascinating when that happens. Okay, back down to 2. And now we're going to drop down back to VWAP, which is just here. Right? So I took a little short at 6,004.25. I covered some at 3 and I covered some at 2. Just on micros, just to see if my brain is working because I said, look, there's a seller here. So I shorted against that seller. How do you wait for the sell to come down and catch bids? How do you know if buying bids come in? Because you'll see the offer lift. See the red line? When you see that moving back up, it means that bids are coming in. Watch. Watch it, VWAP. See how the offer is lifting? If the offer keeps lifting, that means bids are coming in. If the offer keeps moving down, it means it's going down to catch the buyers at lower levels. Did you see how that happened, William? The offer lifted, that means bids are coming in. Spend some time watching that. You'll find it's very, very helpful. It's pretty cool. It's unbelievable how much information you can pull off a 1-minute candle chart if you know what to look for. The problem is everyone's looking for the wrong thing. They're all looking for a pattern. They have no idea why the pattern exists. They have no idea what the business is that creates that pattern. So they're just stumbling around blind, right? And I'm not knocking technical analysis by any means, but wouldn't it be nice to know why a head and shoulders pattern occurs? Why your teacup and saucer handle pattern recurs? Wouldn't it be nice to know the business that creates the pattern that you're waiting for to trade? Wouldn't that just make sense to understand the underlying business that creates the chart that you're looking at? That seems like common sense, right? Just some simple common sense. And then you craft your trade plan based on common sense. Once you've crafted your trade plan on common sense, well, you've taken a lot of the guesswork out of trading, right? Then you just have to hone your skill, right? That's the real rodeo, right? It's like I've got a friend of mine, he's a rodeo guy and he rides bulls for a living, right? And sure, in theory, yeah, you get on the bull and you strap your hand in and then you do this and you move with the bull. But until you actually get on that thing and the chute opens, right? It's a bit of a different story. Like you're not really thinking about, you know, the mechanics when you're actually strapped to a 2,000-pound animal. And that's what you're doing when you're really trading the market, right? See how we ran out of supply? See how the offer started lifting? So all of this mumbo jumbo here that we just had to go through was putting it on sale to bring more people in to buy. That's exactly it. That's why. That's a very important thing you said, William. Right? Right? You guys, William in the room, William's, I should let William in the room for free. Listen, he says he gets lost in real time, and when he looks back on the trade, it was so clear. That's why. That's why you journal your trades. That's why you replay your charts. So you understand, so you get to look for that in real time. You train yourself, right? You train yourself to be able to execute in real time, right? People do it in football. That's why you watch game film, right? So you know where to be. You know how to react. You train yourself. No, my friend is not JB Mounty. No. If it was Jeezy, I would have him on the podcast, right? But you train your intuition, William, right? You train your intuition. That's why you watch chart replay. That's why you journal your trades. That's all that boring stuff, right? The discipline from doing the boring stuff trains your intuition. So when you're under live fire conditions in real time, you're going to act on your training. Makes a world of difference. And we're back to 6,004.5, where those sellers were. Got a couple of minutes left before we're done. Let's see if they can go and take out the sixes here. Now, I grew up in Saskatchewan, so most of my buddies are like, for lack of a better word, hillbillies. So wouldn't catch me on one of those things. No, thank you. Let's see, can we get it past up the fives? Is there now what you got to think when you see something like this is, are there enough buyers that will allow us to increase price over five? Because if there's not, there's no sense in raising price up to 6,006 if nobody wants to buy it, right? So the chart's telling us right now at five. See, look. Can we get somebody to pay 5.25? They keep raising price to a quarter, but nobody takes it, right? Oh, you transported livestock, Dave? Jeez, that's crazy. See, no point raising price over five. Nobody wants to pay over five, so we'll sell it to them at four. Hell, we own it at 59.97, so it doesn't matter, right? Right? We got size under 98 and a half. Whether we sell it at four or five, we don't care. As long as we sell it, right? Right? As my old buddy Addy used to say, JJ, we need big distribution. Distribution, my friends. That's what it's all about. Yep, there we go. We got some new blood, fresh meat. Let's see if they'll pay six. Come on. Right? So you had a few suckers come in. We sold them some 5.25, 5.5. Not enough suckers to pay six yet. See what I mean? Exactly, Raj. This is pure distribution. Poetry in motion, right? This is commerce. Beautiful commerce. Right? They are selling product that they own under 6,000, above 6,000. Right? For profit. Look at that. I'm just going to hang on for a couple of minutes here, if you guys don't mind, and see if we can take out the sevens. I'll go a little longer here. I'm only supposed to do an hour, but oh, while I'm doing this, sorry, little plug for the room. Folks, if you enjoy this stream and want to keep it free, please consider joining the Trading Syndicate. It's where I teach and trade live all day. You'll get direct access to me and other pros. We collaborate on your trades and get all your questions answered. Use the discount in the description below. It's 50 cents a day, month to month. You can cancel anytime. And you can also learn how to get fully funded with our friends at Apex. Their discount code is also in the description. Please check it out. Okay, so we got a seller right at 6. See? See, they're front running where they sold before. They look, if we got up there before, let's sell a couple of ticks underneath. Right? Distribution. That's the name of the game. Right? Buy a bunch of cheap crap, sell it at a higher price for profit. And that, my friends, is why we call it a market. And with that, I will leave you. Have a wonderful morning. We will see you at RTH. Thanks so much. Bye for now. Stay loose out there. We're just starting the day. Bye for now, folks.